Hello, it's Monday, a little bit after 1:30 here on the East Coast. Want to go over some indices and some charts that I saw that kind of are catching my eye here. If we take a look at the market here today, we're seeing the S&P right now. We just pull up all the indices. The S&P is basically it's flat. It's down 9 bips. Nasdaq's off 25 bips. Small caps are down 4 bips. That was down a lot lower this morning. 10-year note basically almost flat also, only down 4 bips on the day here. If you take a look at some charts that did, like I said, catch my eye, S&P is definitely one of them. I'm a big proponent, at least on the technical side of it, um, of gaps being filled. I am a global macro trader, but I use technicals very strongly in the things that I do, and I take a combination. These are models, take a combination of both and kind of merge them together, and then we formulate trades through there. The S&P, as you see, has gone up and gapped 1, 2, 3, 4 different times here. Tomorrow, CPI numbers, 8:30 a.m. So if we have a hotter CPI number, the bond market could definitely start its trekward back up to 5%. Obviously you have to get through 4.7 first and 4.8. If you start to see that, I think some of these gaps and at least some of these gains that we've seen recently can come off. Kind of have an identical chart like that also on the Qs, where we've seen almost a parabolic move last week. And again, gap, 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 gap. That's a lot of gaps. And a lot of times we see gaps getting filled. Here's one gap, gap down. If you went long at that standpoint, you would have felt some pain, but then you would have gotten filled. So I'm a big proponent on gaps. Here's another little smaller gap here, but still, gap lower, and then you filled it kind of immediately. Here we have not. We have not, filled these gaps, and I think we are going to see that. As I was talking about, the CPI is tomorrow morning. TLT has a gap, at least on the downside here. TLT got all the way down to $83. So it wouldn't be surprised me if you see the CPI coming hotter than expected and the 10-year starting to yields go higher, that the TLT does start the downward momentum and get into and fill these gaps here. On the long side, playing a little bit of crude oil here. And I'm playing XLE. This is an ETF that holds some of the larger energy companies that are out there, like ExxonMobil and Chevron and several others. Yes, we are in a slow demand period, at least right now. But OPEC did come out this morning, and they increased their demand going forward. With the geopolitical situation that is out there, anything can happen on a whim's notice. If a couple of missiles get launched up at Yemen towards Saudi, forget Israel even, but if you start seeing something happen in Saudi Arabia and or the Strait of Hormuz, anything happens over there, and even the hint of supply disruption, you could see oil massively skyrocket. There's been a lot of volatility, but look what we have here, another gap. These red and green lines are the trades that I've done. On these trades, all these trades I'm doing, S&P, Qs, TLT, the 10-year, and XLE, I go out at least 2 or 3 months, and I play for those targets because I want to give myself time. Yes, the VIX, I should maybe just buy either calls or puts. The VIX is under 15. It is up today 3.5%, but I'd rather go with spreads because at least in the spreads, I know what my risk reward is defined and my upside is capped. But spread trading has worked out for me over the years very, very well. And I'll talk a little bit more about crude if people want to talk about it because we are still in a backwardated market. I've traded crude for a couple of decades. And if you take a look at the contracts here, December, January, February, March, April, when you're seeing the prices basically lower than the next month, that's called a backwardated market. The opposite is called contango. Backwardation shows that you are in a tight situation that is out there. Geopolitics, a lot of the premium has come out. So, a proxy of playing crude oil, yes, you can do some ETFs in there. You could look at that. You can do two, three times oil leverage futures contracts. I don't like doing that. I play the futures. But I am playing at least oil through a proxy here of XLE. With XLE on the upside here, I think we can easily get back up to $86 in the next 2 or 3 months. So those are the trades that I have. Please subscribe and ask any questions or comments that you might have, and I will be sure and glad to answer them and get back. I will be posting a lot more videos. This is probably 1/20th of the trades that I have on. But be aware, I don't know what your situation is, and everyone's situation is different. Yes, I've had a decent run lately, but that doesn't mean, past performance is not indicative of future returns. So please trade safely. Either just ideas and charts that stand out to me. These charts, I take a look at and I say, okay, there's opportunity, good risk, good reward, good risk reward trades. NVIDIA is coming out with earnings later on in the week. I'm not going to be playing that stock. The premiums are way too high, and the stock, I play a proxy off of that. I play AMD instead of NVIDIA. NVIDIA to me is like a pair of shoes. It's just anything you do, you'll probably be wrong in it. So I've learned over the years, sometimes it's just better. There's a lot of other opportunities that are out there. Okay, tomorrow CPI at 8:30 in the morning. Please comment. Please subscribe. Any questions that you have, feel free to ask. Happy trading.